Good day, Traders Mindset Reset. It's Wednesday, the midpoint range of the week. Now, we just saw some explosive reversals on the indexes, I believe coming off of a news announcement or some response to 20-year bond auctions. I don't know. Doesn't matter. We had first red day signals on the indexes, and of course, we had short squeeze setups on the S&P and the NASDAQ for explosive reversals back up through lower level shorts. Prior to, for the NASDAQ anyways, taking out or just approaching the high of the week level, reversing and then collapsing all the way back down, as we saw in all the indexes. Russell and the Dow were in breakout and stayed in breakout, contrasting that with the S&P and the NASDAQ, which were working into the low of day level. And as I commented on there, short squeeze day 3 reversal. Once that explosion's taken place and they get to another level, anything is possible. Timings, levels, behavior of price, which is why it's important to lock in the money. So today, talking about a couple of simple things. I put that post out regarding which instruments are offering you your best 90-10 rinse and repeat setups. Obviously, we have traders in Asia, we have traders in London, we have traders in the New York session. We have traders who don't have the same access with spreads, etc., so they focus on certain instruments that give them opportunities. Currencies, certainly Asia, London, give explosive opportunities, often, as I mentioned earlier in the previous videos, on the front side of the week. One of the challenges for traders in the New York window is they come to the screen looking for currency opportunities, and sometimes, lo and behold, the train has already left the station. One of the reasons I particularly like the U.S. indexes is because of their 9:30 recurring New York open time. As I do with natural gas, the U.S. dollar index, I always say that if there's an opportunity within the week for one great scalable opportunity, ideally, I'll get that in the U.S. window. Metals, I can look for an Asia coil for an explosive expansion or reversal, or a U.S. session trade. Now, we had an excellent opportunity on both gold and silver yesterday, similar to the NASDAQ on Monday, the false break of the inside day, and we saw the exact same setup last week on the U.S. dollar index, or 2 weeks ago, and the S&P. The exact same 3-day template. So one of the things that I have really tried to emphasize to traders is crystallizing some rinse and repeat setups and just keeping your basket simple, but have your basket reflect the opportunities as your session that you're trading. So I talk about pound, obviously euro in the London window. Guaranteed 1 or 2 times a week. We saw explosive expansions on Monday, I believe it was. We had 3-day setups for the explosive range expansion. Those are the scalable opportunities. So contrast that with catching highs and catching lows. And I've been spending a lot of time the last few weeks really honing in on some specific opportunities related to U.S. indexes, which is why I asked that question, because I'm seeing some recurring behaviors over and over again for scalable opportunities. Now, today's Wednesday. Today we check for the ACB watch list building for Thursday opportunities. Now, granted, we're definitely going to have some markets that close and break out today. Simple rinse and repeat is looking on Wednesday for those markets that can offer us an ACB template. Reminding traders that if you get an opportunity and the trade sets up into Asia or it sets up into London, that it may indeed be an ACB, but it may also be an MCB. When it leaves earlier in a session, it may be a session trade setup to lock in the money, rinse and repeat. And then if it sets up into the New York window, as per the monkey hammer or the ACB template, scaling in, locking in the money, or going to break even and holding till close. That's a specific template for Thursdays, right from the masterclass. So often we can get ACBs on other days, and this is where, again, your expertise, your repetition, your muscle building memory is where you can hone in on repeatable setups. If you're trading indexes in other sessions, Europe, Asia, etc., indexes tend to offer some explosive opportunities. And again, I'm really focused on 2 to 3 of those a week. So if you do the math on 2 to 3 scalable opportunities a week, you can significantly compound your trading account. And in between, you may take a nail and bail, you may do nothing at all, you may just observe. The name of the game is to make things simple, zero stress, zero thinking, zero emotion, and zero science projects. So when you get caught into minutia and all these other little things, that can lead you down a rabbit hole where you're constantly trying to take trades and you're missing out on the larger scalable opportunities. My simple formula is on Monday, I'm looking for Monday trades. On Tuesday, I'm looking for Tuesday trade setups. Tuesday typically expands the range. Which ones give me signal days? Wednesday, the midpoint range of the week, we can have basically 3 types of scenarios. Markets that close in breakout on a Tuesday. We can have markets that break out on a Wednesday. And we can have markets that stay consolidated on a Wednesday and turn into a signal day heading into the backside of the week. Front side, backside. Sometimes the front side doesn't, one trader commented today, oh, the indexes haven't really been given any trade setups in the US window. And I'm like, there's been setups daily. There's been great scalable opportunities 2 to 3 times a week throughout, not only the indexes, but we've had multiple currency opportunities. The metals, of course, are always offering something. It just depends on which session you're trading. If you just step back and, I talk about removing that compulsion to trade all the time and start hunting. Like think about what you're trying to do. I want to significantly compound my account. My objectives is to find trades that I can get in, place a stop, go to break even with my profit target in place, and get away from the screen. Disappear for a while. Go for a jog, go clean the kitchen, whatever, right? Do some push-ups, come back in 15 to 30 minutes, and it's either en route to hitting my profit target, it's already hit it, or it's sitting there going nowhere, and I'm going to just close the trade, or it's stopped me out. It's that simple. So if it's a scalable situation, typically, as you know from the masterclass and the playbook, when they're coiled to move and you're scaling in or you're getting in, they're typically ready to explode immediately or soon after getting in. They sometimes don't even give you a lot of time to get in. You've got 5 to 10 minutes, especially if you've waited. Third hour, 10 a.m. club, a beautiful opportunity on the S&P, an explosive reversal prior to taking out the closing price level and then pumping and rolling over and going vertical. So we had first red days that did complete. They just took longer, but they also gave traders reversal setups, short squeeze opportunities on the 2 pairs that were working the low of day level. So I think one thing to point out, one trader asked about natural gas. What about today? What about natural gas? And I was like, well, what about it? There's no signal. We had an explosive opportunity yesterday, a beautiful parabolic reversal after successive days of closing and breakout, and then a new week, new timing cycle, basically an ACB template on a Monday. But once we have large moves like that, the market will often take a day and consolidate. It makes a peak formation, and it trades sideways. Natural gas, if you're not sure what I mean by that, go look at natural gas today. So stop chasing movement. One trader commented today, oh, the first red day, it's already moved. I'm like, the market isn't even open yet. The market opens, the US index is open at 9:30. I don't care about pre-market, lunchtime market, soup market, clothing market, whatever. I don't care about any of that. I'm looking for my setups based on the criteria that I have based on muscle memory, rinse and repeat on a day 3 after New York opens. And if it's either a reversal or a trend trade. Now, a great question from Clear in the community was sometimes they take off really fast. And I'll say this, whenever they explode at the open, often the misconception can be that you've missed that trade. But the second component is it depends on what day it is, if there has been any news on the calendar, and is it front side or back side of the week. Because sometimes those explosive moves occur on the front side right at the New York Open in the range expansion, and that's what gets traders chasing often later, either the next day or the following day. They're trading further away, whether it's down low or up high, when in reality we can have a larger dump, coil, and pump template building. We see that sometimes on a non-farm payrolls week, obviously not tradable in NFP, Or we could see it in the opposite direction, pump, consolidation for the dump, and the dump can occur on the backside on a Friday, right into the beginning of a New York session, or up high on a Thursday, right into the beginning of the 9 a.m. window. No major red news or 9:45 major red news, but they're specific templates. They're specific templates. And if they're not part of your repertoire, don't worry about thinking that how did you see that, how did you miss that. But if it's part of your rinse and repeat that you've gone back and tested, then those opportunities are there when they present. Now, it's pretty hard when the market's coiled on a day 3 blow off heading into the 9 a.m. hour. If it's giving me a pin hammer on a higher time frame, 15-minute or above, I'll hit the trade. I'll hit the trade. Now, we're not trading into payrolls. We're not trading into FOMC. We're not trading into CPI. We're not trading into PPI. But if it's some, 10 a.m. news and the market's already coiled to explode, I know the news will be the catalyst to complete the move in most cases. But you don't have to trade that. You don't have to trade on a Friday. The only time I'm going to trade on a Friday is when I know I already have a setup heading into Friday. Meaning the template is there. Is it setting up into the timing window on Friday based on that Monday, Wednesday, Friday template? That's a day 3 trade. Wednesday, Friday, day 3. 2 types, trend trades, reversal trades. Today we saw both on the indexes. So key thing is, though, pick a couple of setups that you see repeatedly, whether it's on your favorite instrument or on a little group of instruments, or maybe you've got ones you look for on your currencies. So as I mentioned prior, I treat the 3 metals as one instrument. So basically I'm looking for which one is going to give me an easy parabolic 90-10 opportunity within the week. Sometimes I don't get them the way that I want. Maybe they move in Asia. Sometimes they'll move in London. And on the backside in the US window, it's just not what I want to trade. There's people trading, there's 100-pip moves and everything else. But I'm looking for the ACB opportunities, whether it's reversals or trend trades. I don't want to fart around with metals. Indexes, rinse and repeat. Monday, Tuesday, Wednesday templates. Wednesday, Thursday, Friday templates. If it's a Monday, do I have a Wednesday to Monday template? Wednesday's the midpoint range of the week and a signal day. Inside days are signal days. Closes and breakout are signals. Mondays that break out can be signals. High or low of a week on a Tuesday, the initial bounce breaks out on the day. It can be a signal, especially if Monday's closed in breakout. So these are the little things, just rinse and repeat. Same thing every week. Same thing every week. The same behaviors occur weekly, just on maybe different instruments or set up differently on your favorite instrument, a different template, but there will be one there. It could be a Tuesday, Thursday template. It could be a Monday, Wednesday, Friday template. Large ranges on a Monday, Wednesday could be setting up for a Friday trade setup opportunity. Keep it simple. Congratulations, traders. A great start on a Wednesday, like for both bears and bulls. First red day shorts at the highs. And of course, short squeeze reversals on S&P and NASDAQ. Contrast, if you wanted some homework, go contrast those 2 templates versus the Dow and the Russell. You'll notice that Russell and Dow were broken out and stayed outside, whereas S&P worked the low, worked the low, worked the low, as did NASDAQ. 3 peaks for an explosive short squeeze reversal. If it's not your setup, it's okay. Don't worry about it. The inside day opportunities were there. We've seen them on a few instruments, but again, the inside day, a powerful, powerful signal. Page 69, I believe, in the playbook. So review that. That shows up weekly, pretty much weekly, and that's designed as a pause, right? A pause. We saw it on pound Canadian, euro Canadian. Breakout, inside day. That's a pause. Continued the move, broke down in the US window. I'm not sure if it's gone very far, but those are different than markets that give the false break in a market that's in breakout with the trend. So go take a look at NASDAQ, go look at S&P last week, the inside day, the beautiful failed breakout, and the continuation in line with the higher time frame. Keep things simple, repeatable, and scalable. Appreciate you participating in the poll regarding which instruments that you target, because obviously everybody's in different sessions, different opportunities. And again, I've been working a lot on the index stuff. There's some great opportunities that we'll be going over, and just simplifying. Grow your trading business through scalable, reproducible, recurring behaviors in the markets that require zero stress, zero thinking, zero emotion, and for the most part, zero management. Have a great day, traders. Love you and appreciate you, and may the markets go with you.